All right, welcome back to the next lesson. And today we're going to talk about the 9 lessons for success in apartment investing. I'm going to share with you a lot of the stories and lessons that I've learned over the last, almost 10 years. I'm going into my 8th year right now of apartment investing. I'm going to share with you those lessons so that you can help avoid some of those mistakes and get started faster in multifamily investing. So, with that, like I said, lessons I've learned from nearly 10 years of investing to help you fast track your success in apartment investing. And I can't stress this enough. Success leaves clues. And if you can leverage other people's success, that means they've had enough failures to learn through that. And that's what's really important about a lot of this is just taking advantage of learning those lessons that other people have had to struggle with, so you don't have to have the same struggle, and avoid those common mistakes, but really also taking very effective action. So lesson number 1 here is most people think that they have to start small. I'm one of those people. I started with a single family fix and flip, and I shared that story with you. It was tough. It was really hard. And my first apartment deal that I passively invested in, I think was around 160 units. And my first apartment deal as a general partner, as a deal sponsor, was 184 units. I went from an issue with flipping a single family home to just getting into a very large apartment deals. And if I can do it, you can do it too. First deal, it can definitely be large, 32 units, 150 units, even 300 units. You can do large deals. I'll go back to your biggest limiting factor is the ability to raise capital. So you definitely want to put focus and emphasis there. But think big. Think you've got to get into an apartment complex large enough that you can truly leverage professional property management. That's really your key to success there. And don't let your lack of experience or resources hold you back. That's really where you have to learn to leverage other people's experience and build the right team around you. The second lesson that I had to learn here was to really focus on my why. Because when you have a strong why and why you're doing this, what is it that's driving you? The reality of it is this is not an easy path every day. There are some days that are amazing. There's some days that are really challenging, and there's some days where it's amazing and challenging all in the same day. But it's that why that pushes you through to the other side, and it's very rewarding when you can push through. So having that strong why is much more important than limiting yourself because I don't understand all the mechanics. Those limiting beliefs of, I'll make a decision when the market's better. I'll make a decision when interest rates are better. I'll make a decision after I achieve whatever this thing is in front of you. You just have to make a decision to do it and go, but you have to focus on your why. And by focusing on the why, you learn to focus on the outcome and not the obstacles, which is also very important. And then the other thing it does is it helps you avoid overthinking, like I said, market timing or these other external factors. The best time to start was a year ago. The second best time to start is today. So really just learn to focus on that why, and that's going to help move you forward. Lesson 3 is, we talked about this before, but have a very clear target of what you want and where you want to go. When you fold that in with your why, it becomes very powerful. And so, for example, you've got your acquisition criteria, property size, you're going to do 60 units or larger. Maybe you're going to do 30 or 40 or 50 units. But go big, but be specific about what it is you're looking for. You're going to focus on B and C class properties, for example, and you're going to focus on properties where you can get double-digit returns for yourself and your investors. And if you have that clarity and you know what you're looking for, say no to deals that don't fit your criteria. And I know this from experience. I've done this before where you have your buy box, your deal box, and brokers are going to send you things outside of that. And it's really easy to go chasing those things like, oh, maybe this, maybe this, maybe this. And you're going to just waste a lot of time and spin your wheels. And then it's going to be very confusing for the brokers. So know your criteria, learn that, and just stick to that. Next thing here, oh man, networking. When I first went to raise capital for my first deal, I thought I had it all figured out as far as raising capital. I was like, hey, I've been to these networking events. I got a bunch of business cards. I'll send out an email and all this money is going to start coming in. And that's not what happened at all. I think I had one person invest in my first deal. And I had to learn to be very intentional with my networking and build really meaningful connections. So, the first bullet here is focus on effective networking and not just collecting business cards. It's very, very, very important. So you need to learn to attend events with accredited and sophisticated investors. Just go to events where you're going to be able to find investors. Those could be local events, meetups. They could be charity events. They could be your church. They could be a lot of different places where you're going to find these people. But you need to have meaningful, intentional conversations, not just, hey, let me know if you're interested, and I'll send out an email at some point, because that's just not going to work for you. Also, the networking is really important for finding those right partners and building your team. So you have to learn to be very intentional with your networking, not just I'm going to a networking event, but what are your desired outcomes? Like, how many people do I want to meet? How much capital am I trying to raise? What partners do I need to build out my team? Do I need to find somebody in a specific market so they can be boots on the ground and I can add value in a different way? So those are intentional outcomes that you can have while you're doing networking. Lesson 5. I mentioned this before, but building an experienced team. I can't emphasize this enough. It's a team sport. Your team will make or break you. The problem is trying to do it alone, and that's so much harder. Getting into your first deal, the reality of it is you're probably going to give up a lot of equity. You don't have the experience. You're not going to be able to raise a lot of capital, but the education you get from getting into that first deal, or maybe even that second deal, it pays itself in dividends. So learn to leverage experienced mentors, lenders, brokers, and managers. Learn from other people's expertise to save time and avoid costly mistakes. This is another really important one. And surround yourself with people who have achieved what you want. So if you're going to do this, you need to learn to work with people who have done this before, that can share those lessons with you and that can hold your hand and you can walk you through this process so you can help achieve the goals that you want in a much shorter amount of time. And when it comes to raising capital, I've seen this flow a lot where it's been easy to raise capital and hard to raise capital. And you always want to be raising more capital than you need. For example, there's just a purchase price, and that's just getting the property, but you need to have additional money to fix the property as well. Then you need to have also contingencies, because one of the things you don't want to do if you don't have to is go back to your investors and ask for more money, or you're trying to close the deal but you can't raise enough money. Neither of those are good situations. But having that extra money allows you to account for unexpected contingencies and repairs, and avoids the need for investor cash calls. And I have had to do that before, where you have to go back to your investors and raise capital. It is not fun. I've never had anybody be upset with me about it, because we always communicate very clearly. And, it's just part of the cycles that happen. But as long as you truly understand the market cycles, you're communicating well about what's going on in your properties, you're not really going to have that issue. But it goes back to, you just raise more than you need. I've learned that lesson the hard way. So you need to always be focused on raising capital. Lesson 7, avoid greed and laziness. And I've seen this before, where people are just like, oh my gosh, I got into my first deal, my second deal, my third deal, and they think they have this golden touch, that everything they do is going to work out perfectly and there's not going to be any issues. And it's just been a nightmare for them, and they've had properties foreclosed on, and you don't want to do that. So you need to be always focus on the due diligence and doing things the right way, and do not get greedy, do not get lazy. You're buying and selling multi-million-dollar businesses, you're raising millions of dollars. You need to learn how to always be consistent about this and treat it with the respect it deserves. I also mentioned here, perform due diligence on deals as well as other sponsors, and ask for references and verify track records. Lesson 8 is you want to assess the risk and not just the rewards. What you have to learn to do is really look at data. You want to make data-driven decisions, and it's really easy to have shiny object syndrome where you're like, oh my gosh, this is a great deal if I can make all these things happen. But you have to learn to really study the history and not just a potential upside, but how do you mitigate the risk? How do you stress these deals out so that you can have things not work out exactly, but still have it be a very positive outcome for your investors? And you do that by evaluating market trends, the competition, and property performance overall. You do market surveys. There's reporting agencies such as a CoStar or Crexi, a Yardi. They give you all this information, and you can look back at a lot of these historical trends and you can make better underwriting decisions. And you also need to be very realistic about your projections. It's really easy in your underwriting to fudge the numbers a little bit, and just a little bit here, a little bit there, and it makes the deal look fantastic. But be realistic. If you don't think you can implement that business plan, then don't just go after a deal to get the deal. You need to be very realistic about your underwriting and only go after deals that make sense. And then the last lesson I've learned here is don't go alone. When I first joined a multifamily membership program, I really truly had this idea that I would go and do as much as I could on my own, and it didn't work out. I had to regroup, and it took me a while to learn this, is to not do this alone. Find the right mentors, find the right partners. And once I made that decision, that mindset shift, things went a lot faster for me. Things were a lot smoother for me. The other thing is you want to avoid the bad advice from uninformed well-wishers. And so what'll happen is, as you start to have these conversations, there'll be a lot of people who'll be like, why are you doing that? That's not a great idea. There's issues with this. There's people who have not been there. They have not done that. And they're going to try to tell you that you shouldn't be doing it either. And really they're making fear-based judgments or fear-based decisions, and they're not predicated on any fact. So you have to learn to, when people are talking in your ear that have never done it before, they're telling you, don't do this, it's too big of a risk. You just have to learn to push that aside, because what I've learned is that people always want whatever reward it is that you got at the end, but they're not interested in the amount of work that it took for you to get there. They just see the final results. Oh my gosh, you're so lucky. But they don't pay attention to all the work, all the behind the scenes stuff that you've done. So you kind of have to learn to just have that mindset. And, I've said this before, you got to learn from proven experts to accelerate your success. And when you combine all these lessons together, that's really going to help you fast track your way into getting into apartment deals, whether it's your first one or you got into one, you're feeling stuck, or you got into one of these programs and you're like, they didn't really help me out. There's ways to do this, and there's lessons that I'm sharing with you that you can learn from, and partner with the right people who have that success, and they will take you to the next level. So with that, the next video, we're going to talk about your specific path and how you can get into apartment investing success. So I'll see you in the next and final video.